Traders, Gary Wagner here, approximately 1 o'clock in Honolulu, 6 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 4th day of February, 2022, and this is the daily report for gold and silver, our weekend review. And what a week we have seen. Extreme volatility over the last couple of trading days. The real perception that the Fed has begun and will continue to tighten their monetary policy and have a series of interest rate hikes should have worked detrimentally to gold, but the concerns about inflation have kind of had a push-pull scenario unfold because of that. Gold gained $4.70 in trading today and is currently fixed at $1,808.80, basis the most active April contract. This in light of a more hawkish monetary policy by the Federal Reserve that is backed up by data such as the strong jobs report released today. The dollar only had fractional gains today, trading up by 0.08%, but a quick glance at a weekly chart, which is what we have up, shows you exactly how great the damage was to the dollar index this week, currently fixed at 95.46. Silver closed unchanged to a fraction higher on the week, today gaining about 14.5 cents, a net gain of 0.65%, with the most active March contract currently fixed at $22.52. In terms of the week in review, we are looking at a 240-minute candlestick chart. We did enter a trade this week. That occurred yesterday. As the market was trading down, we had been trying to position ourselves under 1,800 for the entire week. We got our opportunity yesterday as market forces drove the market down. This low came in at approximately $1,788. Of course, it was quickly reversed, as you can see by this candle, and overtook the sell-off that occurred the first half hour or so in trading in New York. Maintain your long position at $1,790, as well as your stop at $1,772. This next chart is a daily chart of gold futures in which we have identified a compression triangle. According to Elliott Wave, it would be just a symmetrical triangle. His model maintains that this is composed of primary waves, or as he likes to put it, legs, simply labeled 1, 2, 3, 4, and 5. He also then subdivides each leg into 3 subwaves, simply titled A, B, and C, which brings us to where current price is in relation to this compression triangle. It is my contention or belief that we have begun a final 5th wave and that we would get an upside breakout. Realize the breakout can go either way, but I believe that we will see an A, B, and a C. The confirmation will occur if, in fact, gold breaks above this upper level resistance line that Elliott Wave simply titled a thrust. As we are along from $1,790, my belief is that we want to be considerate that if I am correct with the model we are working with, we will see the market move up, but have one correction prior to the thrust. That would be a point we would probably want to take profits. If we are able to accomplish that task, we would look to re-enter at the bottom of the small correction that would occur as a B wave and then be long again from this final C wave as it moves to and past resistance. Most importantly, if we are indeed correct that we will see a continuation of this rally, where are our exit targets? There are 2 spots that I am currently looking at. The first one comes in roughly at $1,850. That is based upon this top, with what I'm calling the brass ring for this rally occurring at approximately $1,873 based upon this top. That is my interim term forecast. Finally, I want to bring my interim perspective into what I'm looking at as my long-term forecasts in gold. As you know, we have been focusing upon the recent action, a series of lower highs and higher lows. I believe that that is a compression triangle that will result in a break above resistance. If we look at our weekly chart, we're going up to a more major count here. This is the conclusion of 2. This being the conclusion of our third wave. Our fourth wave concluded at this bottom. We are currently in a fifth wave, and we have completed, in terms of our subset, wave 1. This compression triangle is our wave 2. Once it breaks above that, we will be in a wave 3. That will take the market dramatically higher. At some point, I believe it could challenge or break 2,000. We would get a retracement in 4. And my forecast long term over this next year to year and a half is for gold to hit $2,225 per ounce. This has been Gary Wagner, wishing you, as always, good trading. Have a great weekend. We'll talk to you on Monday. Bye-bye.